Welcome to the One Person Business Podcast. I'm one of your hosts, Carly Reese.
And I'm Joe Rando.
And Joe, you and I at this point have talked to countless solopreneurs. And at the end of the day, the vast majority of them just want a business that better suits their lifestyle. But achieving that lifestyle can be very stressful when you're always worried about money and making ends meet. And unfortunately, that's a reality that a lot of solopreneurs face. So today on the show, we have Dr. Rob Scranton, and he teaches people how to grow their wealth outside of the traditional approaches like scrimping, saving, and denying themselves the lifestyle they really want, which I think resonates with a lot of people in our audience. And I'm very intrigued because he has a different approach that we're going to discuss. And we're going to talk about the basics and really break everything down for you. But it's just a really unique aspect that I don't think a lot of listeners are aware of. And so with that being said, Rob, welcome to the show. We're so happy to have you.
Well, thank you, Carly. Thank you, Joe. Yeah, that's one of our things when we go on podcasts, we often talk about kind of an enticing idea when we talk about how to use the debts and expenses that you already have to grow your wealth. And
yeah,
like so,
well, I'm liking this because I'm a finance geek. So
okay,
I love this stuff. So we're gonna get real geeky on this one, I hope.
Yeah, my first degree was in accounting and finance from said University of Illinois in Champaign-Urbana. We talked about it.
Well, there's the carrot that we're going to dangle in front of everybody. So keep listening. But when I say we want to go back to the basics, I really want to go back to the basics because I want to tee up what you're going to say in this unique take that I don't think solopreneurs have that's a blanket statement. I don't think a lot of solopreneurs have a very good understanding of like how conventional banks actually work. And I think they need to know that background to fully understand what you're going to get into today. So can you kind of give that information to listeners and so we have a good baseline of where we're going to go?
Yeah. No. So a lot of people don't realize banks, unless they go back and think of if they've ever watched that movie around Christmas time, it's coming up. It'll be on TV a whole bunch of time. It's a Wonderful Life. Yeah, Joe has already beat me to it. That kind of gives in the movie example of some of the issues and problems around traditional banks, because a lot of people don't realize that, when you go make your $10,000 deposit at your bank or Wells Fargo or credit and loan or, savings loan, what have you, or I think in It's a Wonderful Life, it was called a building and loan, that you make that $10,000 deposit and the federal government allows that bank then leverage that at a 9-to-1 ratio. So with your $10,000 securing their ability to then make 9 $10,000 loans to other people. And so that makes them extremely highly leveraged. And people have no idea. There's hardly anybody around that even remembers, what happened during the Great Depression when banks were, so highly leveraged, about that. We've got a really interesting family story from my great-grandfather around that and what we're going to talk about as well. So, if there was ever a run on the bank, they tell people that there's this FDIC insurance, and that's really just a line that they put on banking stuff to give people more assurity and confidence that when they put their money in the bank, that it'll be there when they go back to get it. But the reality is their money's not actually there. But if people have confidence that it's going to be there, everything runs smoothly and everything's okay. But if there was ever a panic or a run in the bank, literally like the first guy to get there in the morning would get his $10,000, but the next 8 people behind him, wouldn't get anything because the money's not actually there. Just like in that movie, It's a Wonderful Life, and George Bailey's there trying to get people to say, well, what do you need to get you through tomorrow? Could you do with $10 or how about $100 instead of taking it all out? Because, Mr. Smith, your money's in Joe's house, and Joe, your money's over in Mrs. Hatfield's house. And, and he's kind of explaining all this. And so we end up with a situation where even today, I wonder how many people even remember that the first quarter of 2023, 4 of the 10 largest banks in the United States went out of business. I mean, that's frightening to me. I mean, Joe Biden, the good old Joe, bailed almost everybody out of that. I mean, Roku, I think, had, like $40 million in Silvergate Bank, and the federal government bailed them all out. By according to the rules, the FDIC, they should have only given them $250,000 when the bank. Now, Joe Biden, and our government will take care of these big companies, but when it came to everyday folks like you and me, and there was a big problem like that, I'm not sure that they're going to take care of all of us. In fact, if there was a big problem, the federal government could not ever even print enough money to make everybody whole through the FDIC, insurance program to cover everybody for what would disappear. And like I said, if we've got time, I'll share that story from the Great Depression about my great-grandfather and how they were impacted with that.
Yeah, we will definitely keep that in the back of our minds. So basically what you're saying is it's contrary to popular belief, it's kind of risky to put all of your money with a bank. But a lot of people don't know that there's another way to go about it. And I know that you're a big advocate for the infinite banking concept. Mm-hmm. What is that? What is this other way that people can approach their money for their business?
Yeah, so it's kind of, creating a banking system that you own and that you control and that you don't have to fill out a whole bunch of paperwork for when you go to make a loan or ask anybody's permission or tell anybody what the purpose is and what you plan to use it for. You can just request it and have it in 2 days, anytime you want. Today, if you go to most, banks and you try to take out more than $10,000 of your own money, always remember that, your own money, you have to fill out a bunch of forms and paperwork and explain why and what your purpose and what your intention is for, why you're taking it out, and what you plan to use it for. And I just think that
is that crazy. Patriot Act stuff? Is that because of the Patriot Act?
Yeah.
Okay. Yeah.
That's when that first came into being. I'm not a conspiracy theorist, but it does make you wonder a little bit if that whole Patriot Act was. They went a lot further with it to gain a lot more insight and control over our lives than was necessary. I don't know how many terrorists they've caught by having people fill out that paperwork.
No, but they don't mind having information about financial transactions because it helps with things like collecting taxes and all kinds of fun stuff like that. So yeah, I'm with you. It's kind of like, they never saw information they didn't want to collect. Yeah. And that's true for all governments.
Store somewhere, that's for sure. Yeah. Well, and that's another one of our favorite aspects about creating your own banking system is that you are able to get a significant amount of, the cash in your life into a tax-free environment and, get people's prying eyes off of what you're doing and your personal finances, because it's not flowing through traditional banking systems when you're using it, accessing it, or doing your banking transactions with your banking system.
Okay, is this legal?
I know, like what is the
what's the catch? Almost sounds too good to be true, and we barely even started talking about it.
It's as long as it doesn't involve Sam Bankman-Fried, I'm listening.
I can't speak to it. You tell people I know that Joe Biden's got over $2 million in cash values in his personal banking system. So at the same time, that's kind of reassuring that I don't think the politicians are going to want to get rid of this at any time, because almost everybody on Capitol Hill is doing this. They don't necessarily want you and I to know about it that much, but they all do it and use it themselves.
So how do you do it? We know the concept now, but how do people actually get into it?
Yeah, so it's we use that interesting, and I hope your audience doesn't get up and run out of the room or turn off their podcast when they hear me say this. But we use a very specially designed whole life insurance policy with a mutual company that pays dividends that we're able to design in a very specific way to front load with a whole bunch of extra cash. And so we can participate in the company and their guaranteed interest payments and their dividends, because with a mutual company, we're also owners of the company, and that grows and accumulates tax-free and compounds. And the real magic thing about it is that we then can use that we talk about for our banking system to make loans. We have a lot of real estate entrepreneurs that use this to use their own bank to do flips and make hard money loans. And the real magic thing about it is when they borrow the money from this policy, this bank of theirs, and they use it and invest somewhere else, they never stop the cash accumulation and growth and compounding inside the policy, because legally, that's considered part of the death benefit of your policy. So you're not actually taking money out of the policy or your bank. You're actually taking a loan against the general fund of the insurance company, using your life insurance policy as collateral. So you never stop the compounding of the growth ever, even while you're using that same dollar somewhere else, and you're able to earn a rate in two places at the same time. And I'm just not aware of any other financial instrument or tool that exists out there that has those kind of features and benefits. If you guys know of something, please let me know, because I've been looking for 14 or 15 years and I haven't found it so far.
Well, I won't Google it because that probably won't work. But I have questions. I really want to dig in here a little bit. So now you've got this money. You basically put a bunch of cash into a special kind of life insurance policy, and then you can borrow from the company using the money that you have in there that's earning interest as collateral against this loan that you're taking out. How do the interest rates compare, right? What's the net interest rate typically? I mean, what's the spread between, I have my money in here, it's making 3%, I'm borrowing money, it's at 5%, so I'm netting paying 2% for my loan. Can you walk me through those numbers, or roughly?
Yeah, so just on that, you're going to be, we have an illustration on my website. At some point, we'll talk about that. I have a free training that shows people how you can literally borrow at 6%, which is the highest interest rate that the insurance company will ever charge you to use your own, and earn, at approximately, 3.25%, and, make money all day long and come out ahead by, instead of, we use the illustration of buying a car and using your own banking system versus going to a traditional bank, and show you how you can make money all day long by earning inside your policy, at 3.25% and borrowing, at 6% and make money all day long. And the real secret to that is because with that loan, we never stop the compounding or growth, remember, inside the policy. And when we borrow the money out, we're paying it down every month. And so, we're paying the interest on a decreasing balance, and we're seeing the interest growth on an increasing balance, over the years. So that's how we can actually, every time I show that illustration, I used to use a little cleaner numbers, like we earn at 4% and we pay interest at 6%. And everybody looks at like, well, how can that be? You're losing 2%. But then we go through the illustration, they see, oh yeah, because that's,
but you're putting that money to work elsewhere.
And then
you can, Carly, is this, you're the I've got an MBA. Is this making sense to you, or?
It is. Yes. I love the conversation going back and forth between you guys, because I'm one of those people that has to consume that information. And then that meme that goes around with all the numbers flying around in front of the person, that I feel like that's me right now. So I definitely have to digest this a little more before I can ask any educated questions, but you might get some follow-ups from me.
No problem.
But I mean, the bottom line is, if you, what Rob is saying is that if you borrow money at 6%, but at the same time, that money that you borrowed, so to speak, or it's collateral, right, is earning it at, let's say, 3.5%. The net cost of the money that you took out is 2.5%, right? You're paying 6%, you're getting 3.5%. So the difference between those two numbers is 2.5%. That's pretty cheap money. Now, if I can take the 2.5% money and invest it in my business and make 10%, where am I? I'm way ahead.
Yeah, no, absolutely. And that makes perfect sense. But I have a question for you on that. Like, do people have to have a certain income for this to work for them, or do they have to already have money? So like, where's the starting gate for applying this?
Well, I always tell people, start wherever you're at, and so that you can get to where you want. Don't let, I don't know if I have enough to start this, stop you. I mean, my first policy was, I started, 14 or 15 years, my first, bank, if you will. And I started with what I had. My income was significantly lower than what it is now. But as my income grew and I was looking for more places to stuff cash into, to get into a tax-free environment and get the government out of my hair and stop them peering into anything I was doing, I realized that wasn't enough. So I started another policy. and then eventually another policy. And then I got one on my wife, and I got one on each of my kids. And I think that'll be one of the greatest gifts I ever give them, is teaching them how my wife and I have used this in our lives for every financial move we've ever made in the last 14 or 15 years, and teach them how to use their own policies. My 18-year-old is a senior this year, and he doesn't know it because I want him to keep working hard and save more for college even. But when he goes to college next fall, there's already enough cash value built up inside of his policy that he'll have enough to pay for his entire college tuition. And so he won't have to take loans or work at getting grants or that kind of stuff. He'll just pay himself back.
Are we going to have to delay releasing this podcast until he finishes school?
He's definitely our target, Joe. He's for sure.
He might be.
Yeah,
he might be once he finds out how this is working.
Okay, well, so I kind of have like a long question, and I hate to go here, but God forbid something were to happen to the person that is taking out these loans and everything. Like, where does everything go? What happens?
Yeah, that's maybe a two-pronged question. So I'll just try to use clean numbers again. Say, between the death benefit and the cash value that had been building up inside this policy, to your point, Carly, so there's $1 million in total death benefit between the basic death benefit and the cash value built up inside there. And, you or Joe or me decide to take a $200,000 loan because we found a property we're making a down payment on. We feel like we're going to be able to flip that in a month or two and make a nice profit on it, and then just take what we had borrowed from the policy and put it right back into the policy to replenish that. But we do something silly and we die before that policy can get paid back to that loan. So the only thing that would happen is that when that person died, their heirs or the beneficiary, instead of getting $1 million, they would get $1 million minus the $200,000 that had taken out in loans. And so they would get a net amount of $800,000. So it doesn't evaporate or disappear or go away or anything like that.
So I have a question. And so this is the because this is really fascinating. I'm really intrigued with this, but this is the one that really is giving me agita. Okay. So you talked about, 4 of the 10 largest banks failing, last year. What happens if the insurance company fails?
Well, that could happen, but it's pretty unlikely because the federal guidelines and regulations and requirements for insurance companies are significantly stricter than they are for banks, because they're required to have, on hand liquid assets to pay every death benefit that they have promised to people at the same time if everybody died, on the same day. So that's some pretty significant resources and assets. And it's sort of interesting when you talk about insurance companies versus banks. Where do banks find security, and where do they have confidence in? When I first heard about this infinite banking concept, I have my accounting and finance degree and background. I worked in public accounting, preparing tax returns, doing audits of companies. I was a financial analyst for the Florsheim Shoe Company downtown Chicago, back to Illinois again there, Joe. And I was like, this can't be true. With all my experience and education, how come I've never heard of this? And so I started doing research in a way to kind of poke holes in it and tear it apart from the inside out and prove that it wasn't true. But the more I did that, what I actually found was it was absolutely, completely true. Everything they were saying was accurate. And then that almost made me even more upset, because I'm like, if I don't know this stuff with my education and my fancy college and working in this field, why do I not know this? Or who's trying to hide this from me? And if I don't know this, I'm guessing most Americans don't know anything about this either. And so I went and asked my financial planner about it. And boy, you should have seen his physiology change. I mean, he turned red. He got almost like angry, like he was just waiting for me to stop talking so that he could jump in and attack. And I just thought, wow, that was so weird. I was just asking questions around something I found interesting and fascinating. And he's the finance guy. So I went and asked my mentor that first taught me about this infinite banking. He's like, oh, I want you to do something, Rob. He says, I know who your advisor's company is owned by. Solomon Smith Barney is owned by Citibank. I want you to go to this website. You guys can write this down too. It's called BOLI. It stands for Bank Owned Life Insurance. And he said, you can look up any bank in the country, Wells Fargo, Bank of America, your little local bank in your town, and find out exactly how much whole life insurance your bank owns. So I did that with Citibank, and I looked it up and found out that 35% of the holdings of the entire company were tied up in whole life insurance contracts to the tune of billions and billions and tens of billions and billions of dollars, more than their real estate, more than their stocks and bonds combined. And I thought, well, their agent that they've trained is telling me that this is such a bad idea and it's so horrible to me, but yet they're doing it to the tune of 35% of all their assets. Why aren't they investing in banks? If banks are so great, why are they investing in life insurance companies? And I started thinking to myself, I mean, is Citibank that stupid, or do they just know something that I don't know?
No, good answer.
I feel like my brain is like spinning right now. Like I said, I'm one of those people that like takes it all in and then processes. And I feel like tonight I'm going to be going to bed like, what?
What just happened? What was he talking about?
So question, where does credit play into all of this?
So credit, well, that's the nice thing too, right? Is that you can make all these moves and, like I said, kind of getting the government out of your hair and keeping prying eyes out of what you're doing. Anything you do inside your own banking system is completely under your control. Whether you loan money out to people, you can determine what rate you pay, how fast you pay it back, what the terms are. If you bought a car using your banking system, you would charge yourself twice as much interest as the bank would. You can charge yourself half as much interest. You could pay yourself back faster, slower, or take a break for 5 months and then start back up, making your payments on your truck. If you did that with GMAC financing and didn't make your payment for 5 months, what's going to happen to your truck?
Repo man.
Mm-hmm. It's not going to be in your driveway anymore. That's for sure. And I'm not sure if I completely answered your question there, Carly. So you're free to restate it if I didn't.
No, that's great.
We excited there for a minute.
No, we just hadn't talked about it at all. So I didn't know how it impacted score. It hadn't been.
Yeah, no impact. Doesn't affect it in any way whatsoever because it's not going to be reported anywhere to any credit bureau when you're using your own money for whatever purposes you want.
That's the thing, Carly. The insurance company, life insurance company, has all that money. So when you borrow it out, they don't have any risk because you don't pay it back. It's got to take it from your stuff. So it's not like a situation where you go to the bank and you borrow to buy a house or something, and it's like now, if you don't pay, they got to go and they got to take your house. They got to hope that the house is still worth what they thought it was worth. That you didn't trash the place or the market didn't crash.
A lot more risk.
It's just there's a lot more risk. It's very painful for banks. They call it OREO, other owned real estate. And it's something that you don't like to see in a bank's balance sheet if you're investing because they don't do well owning real estate unless it's a bank branch. Like you said, Joe, with your own banking system, it's your own money and the insurance company is not worried about it because if you die, they'll just pull the proceeds out of that or they'll deliver less to your heirs or your beneficiary if you have loans out against it because they've always got that insurance policy there as collateral.
Yeah. Wow. This is fascinating. I want to hear a real life application and example at this point. So I feel like it's a good time to talk about your grandparents' story.
Okay. Yeah. No, good. It's, when I first started learning about this, like I said, my accounting and finance degree was right after, in that 2008, 2009, realm. And I'd been doing what everybody else is doing, putting my money into a 401k and IRA, making sure I got the company match and meeting with my financial advisor. And that's what, my parents did. That's what, their friends did. That's what everybody at work was doing. And I didn't know any different. And so I followed that, my certified financial planner managed to lose 45% of everything I'd worked for over the last, 10 or 12 years, like a lot of other people. And I just made up my mind I was not going to be part of that system anymore and look for something else. And I started looking at this and, I just didn't believe it at first. I was telling my dad about it. I told you about when I went to I got kind of shot down by my financial planner. And my dad started telling the story. He's like, oh, well, I have a whole life insurance policy on you that we got when you were born. My dad put a whole life insurance policy on me when I was born. And that was all because your great-great-grandfather, during the Great Depression, your aunt and uncle owned the bank in town, and the bank went out of business, collapsed. And so your great-grandfather, that was his brother, your great-grandfather was a farmer in that community, and he would always borrow the money from the bank to buy his seed, to plant the crop, so he could harvest the crop, and then pay back the bank the loan for the seed. But there's no bank, anymore. And, he didn't know bankers in other towns. That was a time when people really didn't travel much outside their county. So he didn't have relationships other places. And he went to the seed company, didn't know the seed company guy, but he's like, hey, listen, man, everybody's going bankrupt. The banks are going bankrupt. I can't give you money or can't give you seed on credit. And so my grandpa was like, well, or great-grandfather was like, well, what am I going to do? I mean, if I don't plant a crop as a farmer, I'm not going to have anything to harvest, and I'm not going to have any money. I'm going to lose the farm. I'm going to lose the house. And but he did remember that, when he was a young boy, his father had put a whole life insurance policy on his life, and he had totally forgotten about it. But when you're in that kind of a desperate situation, your mind works a little harder to find solutions in the middle, right? And he's like, I should just go check and see if that's still there, if that's still in place. So he contacted the, insurance company, whatever they had to do back then by telegraph, or I don't know how we would have contacted them, but found, you still have this policy. Oh, it's got X amount. It's got this cash inside that policy, because he remembered his dad, telling him about that. That was one of the ways people used to save, because back, before the Great Depression era and before, people were afraid to store their money in banks. They didn't trust them, and the Great Depression proved why. So this is a way a lot of people saved, is buying whole life insurance contracts. And so he was able to borrow the cash, go to the seed company, buy the seed, plant his crop, harvest the crop. And then that was the first example my dad was telling about, basically using his own banking system, and sold the crop and then paid the money back to his own whole life insurance policy, or his own banking system, essentially. And so he was able to save the family farm and save the family house, and didn't end up broke and destitute and living under a bridge, I guess, during the Depression. So pretty cool story.
This is not a new concept.
Nope.
This is a tried and true. Yeah.
Yeah, it's definitely not a Johnny come lately. I mean, all the insurance companies you guys were asking earlier about, how sure are we, or how confident can we be in these life insurance companies? And, all the ones that we use, there's a smaller number that are mutual insurance companies, and even smaller number that really work favorably with people wanting to use this infinite banking concept. But all the companies we use have been around for 120 to 145 years, and they've all paid dividends every single year for over 120 years. So they've been very financially healthy and stable. You don't do that unless you're making a profit. You don't pay dividends out. And that's through the Great Depression, 2 world wars, every economic recession and downturn that we've ever had, since then.
It's funny. I was just kind of glancing over, looking at the questions I had prepared today, and I was like, Carly, you're so cute. You have no idea what you were talking about when I was preparing these. I'm like, I think I sound so smart. And I'm like, oh, I'm going to ask him this question. I'm looking at him right now. I'm like,
come on, Carly. Those were very sophisticated questions.
Oh, well, thank you. I don't know if I'm going to ask some of them, because I think we've covered a lot of them, but it was just so funny because I was just looking at them and I was like, I had no idea what I was getting into with this conversation today. Joe, you may have, since you're more well-versed than I am, but
I learned a lot today. So no, I just, this is stuff that I really find interesting, and so yeah, but I learned a lot today.
Yeah.
Well, that's okay if it's the first time hearing this stuff. I was the same way the first time I heard about it, even with an accounting and finance background. I'm like, what? Wait a minute. Rewind. Say that again. What? Did I hear you correctly? And like I said, the more I looked into it, I'm like, yeah, this is, like you said, Carly, these products have been around for over 200 years. This is not a new concept or something that we have to wonder, oh, well, how is this going to work out, or how is this going to turn out? We can look back 3, 4, 5 generations and see exactly how it's going to play out. I mean, these products are virtually unchanged from what they were, 150, 200 years ago.
See, I was afraid we were going to be talking about crypto.
Yeah, you might have a little more doubt and uncertainty around how that's going to turn out, right?
Yeah, I have a lot of doubt and uncertainty. That's a different conversation.
Yeah, for sure.
You know what's going to happen, Joe, is people are going to listen to this episode and be like, there's no way I heard that correctly. And then they're going to re-listen, and our downloads and our views are going to go up because of you, Rob. Because they're going to
Maybe they got to listen to it a second. Yeah, because doesn't that count as another listen, even if it's the same person going back and re-listening to it? So that was my whole purpose, to boost you guys here. So
I figured. Thank you so much.
Thanks a lot.
And Rob, hopefully, this is going to be a very eye-opening episode for people. I am very humbled by this episode. Your goal is to help people find success with this. We have to ask you, what is your favorite quote about success?
My favorite quote about success is just like I said, this felt like it was hidden from my eyes, as it is most people, I think, the first time they hear about it, because it kind of made me angry, like with my degree and education and work experience. Why had I never heard about this? But my favorite quote on this subject is from Warren Buffett. He said that, if poor people would just do what rich people do, they wouldn't be poor anymore. And that's all we're trying to do, is just, copy and mimic and imitate what all the largest banks and the rich people are doing, right? And we should have, similar results, maybe with smaller numbers to start in the beginning, but something where we can work toward, at least anyways.
Well, so Rob, if the listeners are like me and are trying to process all of this, they're probably like, this sounds interesting. I need some handholding. So where can people find out more about you if they want to contact you?
Well, we've got a free masterclass that I'll offer to any of your listeners, that they can go and just go into our portal on our website at yourfinancialiq.org. So yourfinancialiq.org. And I go into this in a lot of depth with some illustrations and, some spreadsheets for people who really like the detailed numbers. But that's really interesting to see it, everything we're talking about when we're using real actual numbers, to see that everything we're talking about is true. If you like math, you can prove those kind of things with, actual math. And so we've got that free masterclass on there.
Carly's in.
Okay.
That is not where I land. But Joe is like, you said spreadsheets? Wait, what did you just say? Did I hear
We tell a lot of fun, interesting stories, but going to a lot of the other aspects that we just haven't even, there are so many unique characteristics and aspects and benefits of using this type of banking system in your financial life that there's no way we have time to go through all of it, on today's podcast. So that's a place where they can, learn a lot more in depth there. So.
Wow. Well, we will include all of that in the show notes. Joe, do you have any follow-up questions? My brain will probably come up with them at 2 a.m.
I won't do that to you. I'm good. I get it. It makes total sense to me. I have lots of good questions that, maybe I'll ask you offline, Rob, but I don't want too much geeking out and people tune out.
No, that's right. Yeah.
Well, Rob, thank you so much for coming on the show. This is a very educational, enlightening conversation, and we really appreciate you taking the time today.
Well, thank you guys for having me on your show, and hopefully I didn't get too excited or seem angry. If I did, I'm just passionate, excited when I get to talk about this subject and tell people about something that at one time I never, knew, and it's just been a fascinating journey using this for the last 14 or 15 years.
Wow, so interesting. Well, thank you so much again. And listeners, thank you for tuning in. We will see you next week on another episode of The One Person Business. Take care.